last week in particular, seen a lot of things that I'll bet most people don't know about. Probably wouldn't believe me if I told them, although they'll find out soon enough. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. Darn glad to be back home tonight. And for anyone who saw last night's coverage, I can't say thank you enough for all the support that I've received. I also understand there are some people who won't understand some of the things that happened, and I'm okay with that too. I guess at the end of the day, there are certain things that to me, I feel that needed to be said, and I'm prepared to live with whatever the consequences of those actions are. Would be a lot easier to me than seeing what I saw and letting it go. So anyway, I'll leave that as it is. If you want to see more, you can check out the YouTube page and find out what may have really happened with this alleged Texas energy crisis. Not quite what you're being told, I would imagine. But with that said, we're going to get back to silver talk tonight. Quite an interesting day. Things are happening quickly. I'm excited to do a couple of hours of research before bedtime tonight. I would say the biggest theme today at certain points, PSLV was up while silver and SLV were down. Perhaps that's one of the key indications that I'm looking at in terms of seeing some sort of break between the paper and physical market. Everything I'm hearing, this is escalating quickly. I know there are rumors going around that Elon Musk may be buying silver. I will research into that. I cannot confirm or deny that yet. I'm sure there's people out there who've already looked into it, but something is happening. And fortunately, I recorded an interview with Trevor Hall of the Mining Stock Daily today, where we dug into all these issues. I think you'll find it really helpful. And again, I just hope everyone's safe out there. I am okay. Our power was magically restored tonight. Another one of those coincidences that has happened lately, but I am good. Thank you again for all of your support. And I really, really do love all of you who have supported what we're doing here in terms of bringing some integrity back to these markets. Real quick before we begin, I don't want to leave that out. Actually, let's get you the full chart so that my noggin isn't blocking the beauty of this one, because this is today's silver chart. You can see some heavy spoofing right there. And again, this dip right here, which I won't play the Bart Chilton clip again tonight. Although I'll say to folks that have kind of felt frustrated, where it's like we have these nameless, faceless agencies where you write letters and nothing ever happens. I found out last night that when you start connecting the specific person who's accountable for something and let them know that you're watching what they're doing. For example, here's Commissioner Dan Berkovitz, who talks about JP Morgan's fine. He opposed the CFTC's determination that JP Morgan's conduct should not result in any disqualifications under the bad actor provisions. And I don't understand why he refuses to say anything about this. Although the good news is that he's actually on Twitter, and we've been introducing a lot of the silver market participants who would really like some answers to that question, amongst others that have been raised on the show. And I would just say, if you have questions, you can go to my Twitter feed, just retweet some of these, or you can contact him directly and let him know that you've seen the CFTC's mission statement. The mission of the Commodity Futures Trading Commission is to promote integrity. I hope they know that word integrity is on their mission statement. Resilience and vibrancy of the U.S. derivative markets through sound regulation. And if you don't feel that they've been upholding that pledge, or you want answers to things like this, that you've heard Bart Chilton, their own former commissioner, he talked about how he calls this spoofing. I would say that's hammering the bid with paper, silver that you don't own, but they called it spoofing, or what JP Morgan settled $920 million for, is what you see here. And personally, I'm frustrated that the silver community has to do that man's job, that agency's job. So anyway, that's how you can contact them on Twitter. Nice of them to leave their address up there. And with that said, here's tonight's show.
Good morning, everybody. Welcome back into Mining Stock Daily. This is Trevor Hall. We have a market update to share with you this morning. Welcoming back our good friend, Mr. Chris Marcus from Arcadia Economics. But before we get into that conversation with Chris, just a quick rundown of the numbers. Gold had a bounce off its low back to 1778 here, futures basis. Silver getting pushed down a little bit more, still north of $27 at $27.12. The dollar still in kind of this short range at 90.67, a little bit down this morning, but the Treasury, 10-year Treasury note's still up. But the volatility quite in the overall market, S&P, NASDAQ, Dow Jones, down between 0.5% to a full percentage point. Chris, I spoke with our mutual friend James Anderson earlier in the week, and I mentioned that this whole silver squeeze conversation continues to grab my attention. And I thought maybe it was a fake out of 2 weeks ago. Exciting times. But from what James has been sharing and some of the information that you have been gathering and sharing with your listeners over on the YouTube channel on Arcadia Economics, it's a conversation that shouldn't die. We should continue to have it and share information. I listened to an interview that you did with our friend Craig Kemke last week on Sprott Money podcast, and you actually called SLV, you called iShares, and got a hold of somebody, an actual person from iShares. And I found that story so enlightening and intriguing. I was hoping you could come on to Mining Stock Daily and share that story.
If you like that one, I got a few more. In fact, I've, last week in particular, seen a lot of things that I'll bet most people don't know about. Probably wouldn't believe me if I told them, although they'll find out soon enough. But Trevor, I love you. Thank you for having me on the show. Thank you for being the great friend you've been. I'm a little concerned about you, though. I know you're a smart guy. You have a beautiful family. You're an investing genius. There's high school kids who are like listening to your podcast saying, I want to be like Trevor when I grow up. Of all the important things you're doing in your life, why are you spending time? The short squeeze is over. Didn't you read the headlines? It was just a fad, right?
That's what they want you to believe. That's why I can't quit it. I told James Anderson.
That's what J.P. Morgan's report said, and J.P. Morgan is a big investment bank, right? Jeff Curry of Goldman Sachs even went on CNBC on February 4th. That's the date maybe people might want to keep in mind, and said that it's impossible that a short squeeze could happen in the SLV. He also said that the shorts are the ETFs, and that the shorts buy the physical and they go sell futures on the COMEX to hedge. So, Trevor, maybe you can help me out today. You know, I went to public school, then I worked for Moody's, then 2-year stint. I feel like I stole a car or something. I got sent to Philadelphia for Wharton for 2-year stint. And came back and worked on a trading floor. Was specialist on the American and then New York Stock Exchange, running an option pit. But apparently I must have missed something, because maybe you could help me. What are they hedging? I'm flummoxed on this, because SLV is a silver trust, right?
Yeah, they have to have the metal.
Oh, it's a trick question, Trevor. SLV is not a silver trust. You don't trust something like that. You don't trust something like that changes the documents in the middle of the night after you have panic buying in the retail market. And I don't use that word lightly, because I know that I wouldn't have had a channel that successful today if I went around saying things like that all the time when they weren't valid. That's why I got bullion dealers from around the globe who put their name and face to it, unlike certain banks that don't put their names and faces to things. And you have these changes that appeared in the SLV documents, which the timing is interesting, because the day after record buying on February 1st, January 29th leading into that, and you have record buying, record ETF editions. I thought it was weird on the second when the price came down 10%. I thought it was more unusual last week when I found out on the 3rd that all of the prospectuses, or not all of them, but at least for SLV and I think one of the other ones, I don't want to get the name wrong. I think I know which one it is, but we'll leave that aside. The market's so healthy, and Jeff Curry went on CNBC saying that a short squeeze is impossible. Why didn't he mention that the day before he said that on TV as a representative of Goldman Sachs, an influential investment bank that has a little bit of a checkered track record if you read past the prospectus and look at the shitty deals they've sold to their customers and then been grilled about in Congress? How come Jeff Curry, when he said it's impossible for a short squeeze, and if Goldman Sachs is an authorized participant of the SLV trust, doesn't that mean Jeff Curry probably would have been aware that the night before he went on TV and said that they had changed legal language and actually inserted clauses that describe the definition of a short squeeze? I mean, fortunately, the stuff is on their own prospectus. They didn't do a very good job of hiding it. Or actually, they just put it out there and assume no one will ever look. But fortunately, we do have real heroes, patriots, global patriots like Ronan Manley, who digs through that and finds that they put that in there in the middle of the night, describing exactly how a short squeeze could occur. But they don't mention that when they come on camera. I know the CFTC is now investigating the Reddit traders, but CFTC, either that's gross negligence by Goldman Sachs and move to market, and I don't know. I think that would be legal grounds, or he lied.
Well, let me maybe figure out another side. Okay, so we're talking about the prospectus from SLV that was changed on what, February 5th or 6th.
Yep.
Okay. Mr. Curry comes on to CNBC on the 8th, but he's representing JP Morgan, who's the custodian for SLV.
Curry is with the Goldman Sachs.
Goldman Sachs, excuse me. Goldman Sachs. Are they a custodian for SLV?
No, they're what's called an authorized participant, which is also a little disturbing because in the prospectus, a lot of this legal junk that nobody ever reads. And by the way, when I did call iShares on February 5th, which actually I didn't realize it at the time, was the day after Jeff Curry said something that's hard to see as true on CNBC. And when I was asking for the prospectus 40 minutes or the audit, they didn't mention anything to me. And I told them that I have a show. I'm a silver analyst. I'm stunned by what I've seen. I just want to get accurate information. When I asked her for the Trevor, did you hear the story of what happened when I asked the iShares representative for the audit of SLV?
Yes, but maybe our listeners have not, so share that story.
Would it seem weird to you if someone who's being trusted to hold all that silver, they said, I think there's one on the Edgar's SEC database? You can call my friend Andy Scheckman of Miles Franklin, ask him for the audit, or if you can go into his vault and do an independent audit, and he won't say maybe there's something on the SEC's database. I've never heard that from a bullion dealer in my entire life. Sounds a little unusual. She couldn't find it. Then I said, ma'am, with all due respect, that's concerning to me. Because she just told me that JP Morgan, who settled for $920 million, we don't really know what for. They've never talked about that. They're busy doing other stuff. But it's a lot of these things just coincidences. But let's get back to some of that legal language change here in February 3rd, before Jeff Curry goes on CNBC and before I call iShares, they can't find an audit. Then they give me an inspection letter that says the last time anybody's even looked at SLV, aside from JP Morgan, was March 20th, time-stamped the weekend before the EFP market broke. Last day of the audit was actually March 6th, and you see silver is below $12 within 2 weeks, which is stunning, especially since SLV is reportedly adding metal, which that's kind of weird if people are buying. Oh, maybe Jeff Curry was right that when they buy the silver, banks just go and short the heck out of the COMEX futures.
Well, but this is part of the story from what I can understand in bits and parses that I've heard and trying to put together. So we've heard that they changed the prospectus that weekend right after that big move up in the short squeeze, and all that buying comes in. But at the same time, we're meant to believe that they've added shares, which means they've added physical silver to the trust by the truckloads, like multiple truckloads it would take to add that. But then at the same time, they changed this prospectus saying they may or may not be able to supply the metal if called upon.
Yeah, well, Trevor, that's the good news is that you don't have to take our word for it. I'll pull up the some of these whoppers they slid in there that apparently they don't tell their investors, which I would think, given the role of some of these banks involved, seems like a breach of trust. In fact, Trevor, did you know that JP Morgan's not only the custodian of the SLV, but an authorized participant too?
All right.
But let's take a look at some of the language they snuck in here that day before Jeff Curry said that a short squeeze is impossible, because what I don't understand is that why would they say then in the prospectus, not tell anybody, even if you call their iShares and ask for the audit, why would they say that speculation on the price of silver may involve long and short exposures? Yeah, we knew that. But then they say, to the extent that the aggregate short exposure exceeds the number of shares available for purchase. That's unusual. Wait a second. Maybe I'm reading this. You can help me. To the extent that the aggregate short exposure to the short position exceeds the number of shares available for purchase. Sounds like someone's talking about a short squeeze. Then investors with short exposure may have to pay a premium to repurchase shares for delivery to share lenders. But it gets better, because in turn, those repurchases may dramatically increase the price of silver until additional shares are issued through the creation process. We'll come back to that in a second. This could lead to volatile price movements in the shares that are not directly correlated to the price of silver. So finally, something we agree with. They're at least saying that their junk products have nothing to do with reality. They put it in their own prospectus and tried to hide it, and they got caught. Then they sent Goldman Sachs out to lie about it the next day. But that sentence, in turn, those repurchases may dramatically increase the price of the shares until additional shares are issued. So they're saying that there's vulnerability to a short squeeze unless additional shares are issued. But if you read another little interesting addition to the prospectus earlier, this is all February 3rd when the market's clean. Silver. That's why, Trevor, I know this is maybe the kettle calling the pot black. I got to call you the conspiracy theorist today. Silver squeeze hashtags. You're so funny. Because there can't be a silver squeeze. Why would they say on February 3rd, the day after the market collapsed 10% on record demand, I'm sure the CFTC is looking into now, why would they include that to the extent that demand for silver exceeds the available supply at that time, authorized participants may not be able to readily acquire sufficient amounts of silver necessary for the creation of a basket? You know who two of the authorized participants of this trust are, Trevor?
JP Morgan and Goldman Sachs.
And then if you go back to our first quote, let's take this again. I understand it probably makes people's head bleed listening to this junk. Because here they say, in turn, those repurchases may dramatically increase the price of shares until additional shares are issued through the creation process. But it sounds like JP Morgan, at least the way I read this, I mean, I have 20 years of financial experience. I'm not a lawyer, but I think I have some qualifications, at least, if I can't figure it out, it might be someone else who can't. Because the way that sure sounds to me is that they could say they don't have any silver, JP Morgan or Goldman Sachs. They could actually facilitate a short squeeze. I'm not saying that these banks would do something like that. I would never make an accusation like that. But I'm just pointing out that it's possible given the way these documents are set up.
So what reminds me of, well, actually, it doesn't remind me. So something I heard yesterday. I mean, you and I, we continue to talk about this silver squeeze. What you have been finding and sharing with your subscribers and your listeners has just been mind-blowingly powerful. And keep it up. Keep up the good work.
You ain't heard nothing yet, because we'll come back.
I'm looking forward to what's coming down the pipeline to listen. You and I have talked a little bit about the silver squeeze that the Hunt brothers tried to pull off in I think it was the 70s, were unable to because it got cracked down on. Warren Buffett has a history with silver. In fact, last night I'm out walking the dog as the snow was starting to fall here in Denver. And I was listening to Grant Williams' last interview with Anthony Deaton from Edelweiss Holdings. And he had an interesting story on a similar side on the gold spectrum with GLD. And he had this interesting story about buying a lot of shares, like millions and millions of dollars worth of shares in GLD. And under the prospectus, it was his understanding that he could go and exercise those shares for the physical metal. But after months and months of trying to get that done, he said it was apparent that they did not want that to happen. And so he just cashed out and bought the physical metal on the market.
Well, as parents, somebody doesn't want something to happen. Although, Trevor, I'm going to play, you can let me know if you need to edit this out, but can I play what Jeff Curry said on CNBC before I read one last amendment change to the prospectus that I think will put it in context for folks?
Sure.
Yeah, Jeff, I just want to push back against something you said, not because I think you're wrong, but I want you to clarify it. You point out that it would be impossible for retail.
And I play this because this is the CNBC interviewer talking to Jeff Curry, authorized participant of SLV Goldman Sachs, February 4th, day after all those changes we just met. And Trevor, it's like the guy asked him all of your questions. So we'll play this. It's 2 minutes long.
Retail investors to force a squeeze in something like silver and the differences between cornering a commodity versus squeezing a stock. But I remember 10 years ago, there was a moment when GLD, the gold ETF, had more assets in it in dollar terms than the SPY. And I do think that GLD was moving the price of gold. I can imagine a similar situation with silver and the silver ETF if people get excited enough about it, where what happens in the markets ends up influencing what happens with the actual metal in real life. You're saying you don't think that that's a possibility?
I mean, you're talking 900 million ounces in the ETF versus a 25 billion ounce market. By the way,
but those billion ounces don't move.
But the silver market
just sit.
Go on.
They just sit. Those other ounces just sit. They don't move.
Right, but you look at the flows going in and out of these ETFs, they're not that big. But I guess my question is, forget the ETF. In terms of thinking about how you're going to create a squeeze, the shorts are the ETFs. The ETFs buy the physical, they turn around and they sell on the COMEX to be able to hedge that physical position like any other corporate. It's not a naked short like in an equity. But here's the main reason why I don't think it's possible to squeeze one of these markets like what the Hunt brothers did in 1980. You got position limits in these markets, and they've gotten tighter and tighter. There's 7.5 million ounces right now, which means that if you were to squeeze it, you would have to divvy up the position to get the inventory off the exchange 53 times, which each position worth $217 million, and then do it in a coordinated fashion. That's why I say it's incredibly unlikely.
Trevor, I would say what's incredibly unlikely is a lot of the figures and logic that he cited there. And I understand the things that I'm saying, and I'm prepared to defend them in court. I have a feeling I'll never have to do that. We'll see. But first of all, but maybe I'll pause. And does that answer any of your questions? Because he talked about the Hunt brothers. He talked about the short squeeze.
I don't know if it answers any of my questions, but it does kind of confirm my logic and my concern.
Does it seem so? Again, this was on February 4th when he said it's impossible. I'm going to read you because apparently one of the other trusts, which one is Aberdeen SIVR. This is what your trust did. Ronan Manley reports for on February 2nd, 2 days before Jeff's appearance, in the amended text under a newly inserted heading of a possible, in quote, short squeeze due to a sudden increase in demand of shares that largely exceeds supply may lead to price volatility in the shares. Oh, but wait, there's more. As the date of this prospectus, the fund and other silver exchange-traded products are experiencing a sudden increase in demand of shares following, underlined and bolded, an online campaign to harm hedge funds and large banks with substantial short exposures to silver.
They're victims.
Trevor, can you repeat the last? Maybe I got to get my eyes checked. They put in the prospectus of one of the silver trusts Large banks with substantial short exposures to silver. I thought that, Trevor, you told me that's conspiracy theory. The short position. They said it. Jeff Curry said there's no short position. Or no, actually, he said there is a short position. Because
it's impossible to short squeeze it.
Here's the other question, Trevor. SLV is a silver. The trust isn't really fair to the word trust, but it's a silver fund. They're supposed to put silver in there. It's not a hedge fund. They just advertise that you send your $25 to iShares and they're putting 0.9%, whatever. It's not quite 1-to-1. It's slightly less than.
Yeah.
Is my understanding correct? I don't want to get this wrong. I can't figure it out. Is that how you understand the SLV?
Maybe from the information that I've heard, yes, that's how. Maybe I'm wrong. And I want to get it correct as well.
So
but from what I understand, that's how it goes.
Let's say you buy an iShare for $25. BlackRock has the money. Their iShares representative said that anytime they say shares are added, metal is added that day. I said, I want to be clear. Is it, you're working the order, they're going to get it in over the weekend? No. If they add shares, metal's put in there that day, she tells me. I repeated it out loud to make sure I had it correct. Yeah, you got it correct. So I said, who adds or subtracts it? JP Morgan. I'm like, oh, well, and I actually said, I'm like, is that a little bit of a conflict of interest? There's some red flags here. But JP Morgan is, so we'll leave that aside. What is the hedge? So if iShares gets to $25, they give it to JP Morgan and they buy the silver and they put it there. Why are they selling futures on the COMEX? I don't understand how what is that hedging? If somebody wants to hedge, it would be the customer who's long the SLV share. But the ETF, Jeff Curry said the ETFs are the shorts. They buy the physical and they sell on the COMEX. But they're buying the physical. JP Morgan is called the custodian, not the fund manager. And here's another thing, because fortunately these guys are so transparent. You already know which lie they would most likely come up with next. So I imagine it'd be like, well, we have the intraday risk from when we receive the money and then place the funds. Okay, good. I can't wait to try that in courtroom, because let's think that one through. See, Trevor, and I appreciate you allowing me to speak to your audience, because they're going to, after today, you'll be able to start reading through these banker tricks on your own. This was one of those fast talking things that they just hope nobody ever notices or looks. Kind of like how when they claim there's an energy crisis, but JP Morgan has parking lots lit up all over downtown. That's probably, I don't know, we'll leave that aside. But let's say that they are actually hedging. They get your $25. Trevor, if it's your position, they get you like $25 billion, and they're working the order. So, yeah. So let's say that they've received the money and they want to hedge because, while they have the cash, if they haven't yet purchased the silver, if you're hedging, you want to lock in place. So if you paid the equivalent of $25 minus the spread, you want to hedge that. So if BlackRock or JP Morgan as the custodian is hedging that, if they have the money and they're advertising long exposure to silver, if they're actually hedging anything, wouldn't they buy the COMEX future?
Right. Chris, we got to wrap it. And I think that's a good place to wrap it. We've covered a lot of information. And for maybe listeners out there who are new to this, it is a lot to take in. I recommend going to the Arcadia Economics YouTube page. Follow Chris. Follow our buddy James Anderson over at SD Bullion. It sounds like there's more coming. You're doing some great reporting, some great investigative work. I'm very proud of you. And let's connect once again here in the next couple of weeks.
Well, I appreciate that, Trevor. Having friends like you and true role models and people that I can look up to and be inspired by goes a really long way. And I thank you for all that you do and stand for.
All right. Love you, buddy. Take care. Stay warm.
The information presented should not be considered investment advice. Mining Stock Daily and its affiliates are not responsible for any loss arising from any investment decision in connection with the material presented herein. Please do your own research or speak with a licensed financial representative before making any investment decision.
So thanks as always for being here. Hope you had fun with that. Hope it's helping to explain some of these things that are going on that the CFTC refuses to comment on despite their public oath. So with that said, hit the subscribe button, hit the notification bell, and we are going to have plenty more coverage. I think it's going to be an exciting weekend. I will be here with you as we watch the action in the silver market unravel. So I hope you're having a great night. Thank you again. Love you all, and I'll see you soon.